Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, December 2nd, 5:44 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Daily Market Insight video. Market state, we're in an uptrend. Check the trend gauge over here. We see what makes us happy. Anyway, if you're a bull and it makes you happy and you like making money, we're in growth mode. As you can see, the coveted four green arrows, market leaders acting fine, although underperforming a bit today. Saw quite a few gap up and close near the bottom part of their range, but none really getting into any trouble that would be alarming. And then all five of the major indexes trending. Actually, I should say six of the major indexes, as we're putting more emphasis on the equal weighted S&P 500, but all trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. We use this trend gauge to determine how much client capital we're allocating to the market. And if you follow these videos, we update it every night and give our thoughts on the market. We'd appreciate it if you would like and subscribe to our YouTube video. That helps with the algos. And if you're going to click unlike, at least tell us what you don't like so we can have a reasonable conversation about it. Don't just be an anonymous jerk. So, what happened today? Big tech leading the way after the Thanksgiving holiday. S&P 500 and Nasdaq 100 making all-time highs. Here are the numbers. Our 21 over 21 list. I mentioned leaders not really outperforming today. This is a clear indication of at least the 21 that we've picked, which are staggered across 10 to 12 sectors. 9 up, 12 down, down an average of 0.5%. Still no real damage done. The big eight, here's what flexed today, up 1.7%. All eight of the big eight up. The Mag 7 plus Netflix. The RG8, this is our eight growth ETF composite, up 0.29%, dragged down by FFTY. Again, this is the IBD 50 leading index, and when you see that's red on the day, that gives you a decent idea of what leading stocks are doing. The S&P 500 opened up 0.13, traded in a tight range. That's good. That's confirming what we're seeing on the VIX, and the VIX range, or sorry, the S&P 500 range contracted back below 1% on a 21-day basis. We like seeing that as well. Ended up 0.25%, equal weight down 0.25%. So again, an indication that big tech led and breadth not so good today. Nasdaq 100 up 1.09%, equal weight up 0.7. The Dow red, mid caps red, Russell 2000 slightly red, Global 60/40 up 0.19. Our flagship GROTECTION portfolio up 0.25%. Let's get into the charts then. We will get into the 21 over 21 for this week. So here's the S&P 500 making new all-time highs. Let's put it on a 5-minute chart. You can see how tight the range was. Really not much of a downside threat. Didn't drop below the late morning highs from the abbreviated session on Friday. Tight range, making all-time highs, minor pullback into the close. Nothing wrong with this. We like it best when we're trending above all four of these moving averages. That includes the ultra short term 8-day exponential moving average. That's the purple line. As long as we've got a 6 handle on the S&P, there's really nothing to be concerned about from a broad market perspective. Certainly, your individual stocks you got to take on their own merits. Nasdaq 100, we had been talking about how it was lagging since the election. Well, it made up a lot of that from a price basis, not necessarily on a relative strength basis, which means it has more to climb if that's where fund managers want to put their money for the rest of the year. But all-time high close and poking its head into all-time high territory today. Dow Jones Industrial Average, the only one of the big three cap of the market, big cap index is not making an all-time high, down slightly on the day. S&P 400 mid cap. This is a really nice looking 4-day handle. This is putting in after the 5-day strong bounce off the 21-day moving average and 3,200 level. Keep an eye on this. We like this contraction and this pullback. In fact, that's going to be one of our keys going into tomorrow. And finally, the Russell 2000 small cap index looking very similar. Nice tight contraction after the big move up off of 2300 and the breakout. We'll look at RSP very quickly, the equal weight S&P 500, as you can see, in a 5-day tight range here above the 8-day moving average, not making an all-time high today. Not surprising though, that happens. I mean, on the days when the big cap tech are going to lead, you're going to see this lag and vice versa. So let's go to the inter-asset correlation. We'll start with the VIX. We like what we're seeing here with the VIX with a 13 handle onto the dollar. Now, Trump mentioned that he was going to put tariffs on BRIC nations if they tried to get away from using the dollar. Well, that strengthened the dollar on the day. It's still below this. Let's go to UUP real quick. Like to talk about that abandoned baby, my favorite name uh for a pattern. Right there you can see gap before, gap after. So let's draw a line there, and that's notice where we've got an alert to see if we're going to start to fill that gap. But for now, that's a top in the dollar, not as clear on the true dollar index because it trades uh, more outside hours than the UUP does. Okay, moving on. That's the dollar. Strong dollar normally not good for precious metals, and they've been lagging recently, and they lagged today. Here's gold down a little less than 1%. GDX gold stocks languishing below the 50 and the 21, down 2.2%. Silver down 0.5%. Bitcoin trying to make a run at that 100,000 level again, but took a break today and pulled back down 1.3%. On to bonds, broad bond index, tight close down on the day, just barely. TLT, however, up a little bit more than that on the day, up 0.24%, which means you're going to see TYX, the long bond yield, pull back, and the 10-year, the TNX, up on the day. So a little bit of divergence in Bondville. That's our inter-asset correlation. Let's go to the tail of the tape. And stochastics, first of all, very positive on the RG8 and all, and the major indexes. NASI, tailwind too, declining dollar tailwind, yields a tailwind. Percent of stocks below the 5-day hit 90 last week, down to 42 last I checked. So that's a tailwind as well. News, no post-holiday hangover. Really no major news. After hours, Tesla down a little bit as an activist judge for the second time, even though shareholders voted for Elon's pay package, rejected it. That's just nonsense. It'll just go to a higher court. The keys coming into today, that 60-20 range, which we broke above on Friday, above it again today. 515 resistance on the Nasdaq 100, broke above that. Mid and small cap relative strength, no. Dollar down, also a no today. We'll be changing the key slightly for tomorrow. Day count from up 1 to up 2, 7 days above the 8-day moving average, 10 days above the 21-day moving average. Just tight range upward bias action on the day. As far as sectors go, semiconductors, FNGS and MAGS, those are ETFs for the FANG and Magnificent Seven type names. They led today, along with the tech indexes XLC, K, and Y. To the downside, oils, utilities, real estate, gold, and silver. Only portfolio change on the day, added a little bit to VRT, bringing our adjusted beta up to 1.94. Bottom line on the day, big tech leads S&P 500 and Nasdaq 100 to all-time highs. These we'll be watching tomorrow. I mentioned the 6 handle on the S&P. we won't even need to be concerned with the S&P as long as it's riding the 8-day exponential moving average higher. So that'll be our key for the S&P. For the Nasdaq 100, that close above 515 we saw today. We actually poked its head above 16 intraday. We want to see if that we can stay above that 515 level on the Nasdaq 100. And mid and small caps, I mentioned that nice little 4 or 5 day consolidation that we're in. So keep an eye on mid and small cap indexes to break out. That's what we'll be watching going forward. Let's get to the stocks now. The 21 over 21 list. We'll sort them by price change on the day. Actually, no, we'll sort them by what we own, and then we'll point out the rest and what the changes were. So VRT, we added to this today. It reversed late in the day on some news that Amazon might be developing their own cooling technology for servers in their data centers. That's just a headline knee-jerk reaction, but we certainly want to see VRT hold today's lows since it briefly undercut and reclaimed the 21-day moving average. A-Lab up after hours as another name that we're going to start talking about. CRDO, Credo Tech, up about 30% on earnings. They're a networking company, but that whole data center AI theme, A-Lab kind of riding that coattail, but bounced at the 8 EMA and the 100-day level today. MSTR tightening up over the last 3 days. Usually, when it tightens, that means it's getting ready to do something. Is it going to break higher? Is it going to break lower? We're watching this 400 level to the upside and the 21-day moving average to the downside. Bitcoin bounced at the 8-day moving average. Reddit tight range today, sitting on the 8-day moving average. Dutch Brothers continues to have a major change in character and just trend higher since its breakout on its earnings report. It's actually our biggest position right now. Tesla strength down 1.5% after hours, as I mentioned. Snowflake, nice tight action since its earnings gap up. This is another one we're looking to add to if it can break out of this tight range. And ITB, we took Toll off. It's acting pretty much like ITB. It has broken out. ITB has not. And we own Nail. That's the 3 times leveraged home builders index. We use ITB to make the decisions. You don't ever want to make decisions off of a derivative chart. You need to make it off of what the underlying is doing. In this case, the ITB is the underlying for Nail, and the Toll chart still looks great. That's everything that we own in the portfolio. Here's the rest of the 21 over 21 list. I'll go through these very quickly. Sprouts just continuing to be a beauty, riding the 8. SMR, very volatile stock, but look, if you draw this range, the optimal play is to buy it when it's down near the bottom of the range, and certainly not when it's showing strength near the upside of the range. So fairly low risk entry here for SMR. Next, Decker's acting great since it broke out of the cup and handle. Celestica tight for the last couple of days. LNG also tight for about 2 weeks now. We're keeping an eye on this. Team continued strength on software stocks. Twilio continued strength, another software stock. XPO tight around that 150 area. Carvana tight around the 8 EMA. Palantir riding the 8 higher. Post broke the 8 today. I think it got a downgrade, but that's a great looking chart. And the stock that we added to the 21 over 21 list this week, GE Vernova, big leader, has significant gains, putting in this very nice tight 1, 2, 3, 4.5, almost 5 week consolidation here. So this could give a clue as to the overall AI data center names, as this has clearly been a leader. Look at these massive 2025 earnings gains, 174% with only a 72 PE. Any low risk entry on this is a safe entry as far as I'm concerned, but we're certainly watching that. And that's your 21 over 21 list for this week. Reminder, our flagship portfolio is named GROTECTION because it has a dual mandate: grow assets during uptrends, protect them during downtrends, such as the 2022 bear market. We just follow our rules. across three time frames, get out of the way. The stocks basically take us out of the market, and then we look to what the indexes are doing for further clues on the overall strength or weakness of the market. That seems to make common sense. That's a common sense approach to me. What other aspect of your life, when it's going poorly, do you not do something about it? I like to get into Twitter arguments all the time with people that say, no, just buy and hold forever. The market always comes back. Well, that's great if you have the lifespan of an oak tree and never have any need to spend money. Otherwise, ask anybody that was close to retirement near the 2000 tech bubble burst or the 2007 financial crisis if they're happy that they just sat on their hands. And if you like this approach, reach out to me. The email's don@revereasset.com or my partner, Dan Stewart, dan@revereasset.com. I'm on Twitter defending all things righteous at D Vandenbord. Phone's 855 Real Wealth. That's 855-732-5932. And with that, I'll wrap it for Monday, December 2nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.